Very good evening, guys. Please confirm if you can see my video and the screen is properly visible and I'm properly audible to you guys. Please confirm so that we can start our session. Please confirm, everyone. All okay? Very good. Okay. Now to start with the okay. Now, so to start with the day 5 of ACCA FR revision series for September 2022 examinations. Today we will be discussing about a topic called published financial statements. Now, see, this topic is when you study this topic is not something new, new which you are studying new. This topic you are already aware of. You are already aware of this topic, okay? But just you need to understand the type of questions that can get asked in the exam, okay? So for that, before we study that, you must understand that to solve this, okay? So this is the nothing but preparation of separate financial statements, and preparation of separate financial statements requires knowledge of all IFRS and IAS, which we have already discussed so far, right? Now coming to the type of questions that can get asked in the exam. There are only two type of questions that can get asked in the exam. There are only two type of questions that can get asked in the exam from this one, and they are type 1 and type 2 and type 2. Now type 1 is it will ask you to prepare SOPL, statement of profit or loss, okay? And type 2 is it will ask you to prepare statement of adjusted profits. What is the difference between these two? In type 1, the question will ask you to prepare the complete SOPL, that is the revenue, cost of sales, gross profit, operating expenses, and then you can say profit from operations. Then you have to deduct finance cost, add investment income, basically the full SOPL. But in type 2, the question will already give you the profit. But there are certain adjustments or rectifications that are required to that profit, already calculated profit, okay? So we have to start with the profit that is given. We have to make the adjustments which is given as part of adjustments, right? And then we have to arrive at the correct amount of profit. Now for both these type of questions, what the question will give us will be the question might give you trial balance, or the question might give you extract of trial balance. Either trial balance, or the question might give you extract of trial balance, plus the question will give you certain adjustments. Right? And now from these adjustments and the trial balance or the extract of trial balance which will be given, for type 1 you have to prepare SOPL, or for the type 2 you have to prepare statement of adjusted profits. Now we must understand that this should not be the only requirement. This will not be the only requirement in the question, okay? The question might also ask alongside what? Let us discuss that as well. Just a minute. This is the key requirement which the question might ask. Okay, but now in addition to that, the question might also ask you to prepare statement of financial position, or the question might also ask you to prepare statement of changes in equity, right? The question might also ask you to prepare a statement of changes in equity, right? So all these things can also be asked in the exam. Okay, now the question might ask all three, like SOPL, SOFP, or SOCIE, or the question might ask a statement of adjusted profits, SOFP and SOCIE, all three, or the question might ask you any two, or the question might ask you any one. Okay, if the question might ask you only this one, it can be possible. It can be possible that the question is ask you SOPL and SOFP. It might be possible that the question is ask you SOPL and SOCIE. Okay, it might be possible that the question will ask you statement of adjusted profits or statement of financial position. Okay, so basically what I am trying to say here is the question will ask either this or this, but this can be asked, these two can be asked with any of these requirements. These two can be asked with any of these requirements. But yes, either the question will ask you SOP and L to prepare full, or the question will ask you to prepare a statement of adjusted profits. Now the examining team suggests us or recommends us two questions. Okay, one question for this one type, this type, and one question for this type. So for this one, the examining team suggests us to solve Vernon company. Okay, and for this one, the examining team suggests us to solve Haverford. And both of these questions, trust me, are wonderful questions. If you practice these questions, all the requirements will be done. All the requirements will be done. So Haverford is tested in March, June 2019, and Vernon was tested in March, June 2019, and Haverford was tested in March, June 2018. Okay, it is already tested in the exam, coming up from the past papers, right? So now what we will do is we'll solve Vernon company and we'll solve Haverford company in the class. Okay, now we will be solving this in the ACCA practice platform, so that we are well versed with all the type of questions that can get asked for published financial statements. But yes, to solve this I will require your cooperation and support in this, so that the adjustments I will explain it to you guys. But yes, it is you guys who have to tell me what will be the treatment of this. Okay, now definitely I'll help you out in that wherever you get stuck, but yes, you have to cooperate it fully. Okay, is that clear, everyone? Can we start solving these questions? Can we start solving these questions? Please confirm. Please confirm, guys. Can we start solving these questions? Okay, fair enough. Fair enough. Let's start solving these questions. Okay, first we'll start with Vernon company. We'll start with Vernon company. This is Haverford. This is Vernon company. This is Vernon company. Okay, and now this is your ACCA practice platform. This is your ACCA practice platform. Okay, now, so this is your question for Vernon company. See, this is coming up from the March June 19. See, March June 19 question. Your past paper, March June 19. This is your past paper. Now coming to question number 32 for Vernon company. Question number 32 for Vernon company. Right now, the following is the extract of trial balance. Extract of trial balance. Is it the full trial balance or the extract? It's an extract of trial balance that is given, right? Now, and following notes are relevant. Basically, these are the adjustments that are to be done. Right now, before we make these adjustments, see, come to the requirement. Produce a statement of profit or loss and other comprehensive income for the year ended 31st December 2008. Now coming to our notes. See what is it in our notes. What is in our notes? What is in our notes? See, type 1 is SOPL, and what is the question asking you? Statement of profit or loss, right? Statement of profit or loss, right? So type 1, right? And alongside the question is also asking you to prepare other comprehensive income. Other comprehensive income, right? That is a part of the P&L itself. That is a part of the P&L itself. Okay. Now, any other requirement? No other requirement. Question is also asking you to calculate earning per share, which we will not be discussing, which we will be discussing in the next class and the last class, that is the tomorrow's class, right? Tomorrow is the day 6 of the revision session, and it will be the last day of our revision session. Okay. Now, okay. So the question is only asking you to prepare SOP and L, right? SOP and L. So it's a very easy question. It's a very easy question. Let's try to solve this question. Let's try to solve this question now. Question number 32. So what is the question given in the trial balance? Cost of sales is given, finance cost is given, investment income is given, operating expense is given, revenue is given, tax is given. Let's discuss the notes one by one. So what I will do is I will discuss the notes here. And I will solve the main requirement in the ACCA practice platform, because I have to discuss notes with you guys. Okay, notes. Okay, so let me write it here. Let me write here. First, I'm solving Vernon company. First, I'm solving Vernon company. Vernon company. Okay. Now, this is March, June 2019 question, right? Vernon company, right? Now, let's start solving it. Note 1. We'll solve each and every notes and understand everything, right? Now, so this will also help as a sort of a revision for all your IFRS also, right? Now, Vernon company made a, okay, but first tell me what is the year ending of this company. What is the year ended? 31st December 2008, right? So let's write here, year ended 31st December 2008 is the year end, right? Is the year end. So this will help, this will help us in solving the question. Now, okay, first note, Vernon company made a large sale of goods on 1st July 2008, that is during the year, okay, which was also the date of delivery. Under the terms of the agreement, Vernon company will receive a payment of $8 million on 30th June 2009, that is after 12 months. After 12 months, it will receive a payment. Tell me what is it? What is it called as? What is this adjustment called as? When you are delivering the goods now, when you are satisfying the performance obligation now, but you are receiving the payment after a year, what is this called as? What is this called as? Tell me, guys. What is this called as? Anyone? Anyone has the answer? Deferred consideration? Akshit, is it a group accounting question? Is it a group accounting question? Don't you think it is a this term is called significant financing component? This term is called significant financing component. Significant financing component. Guys, understand what is a large sale of goods. So sale means which standard? IFRS 15. IFRS 15, right? This is as per IFRS 15. Revenue. IFRS 15 on revenue. Right now, okay, tell me what should be what is the treatment that we do? Revenue to be recognized is what? What is the amount of revenue to be recognized in such cases? At present value, right? Present value. Now, what is the present value of 8 million at the rate of cost of capital as 8%? So 8 million multiplied by discounting rate is also given 0.9259. 0.9259 is given, right? Now let's take the amount in thousands. Let's take the amount in thousands, because the trial balance is also given in thousands, so we will calculate also in thousands. So it is 8,000 multiplied by 0.9259 is 7407. Is 7407 is the amount of revenue. Is the amount of revenue, right? So what is the correct accounting entry? The correct accounting treatment should be trade receivables account debit to revenue. To revenue. What is the amount? 7407. 7407, and this entry should be passed on 1st July. Now what is the entry that will pass on 31st of December? Don't you think we will unwind this trade receivable? We will unwind this trade receivable, right? We will unwind this trade receivable. So what we will record? Again, trade receivable account debit. Trade receivable account debit to what? Tell me, to what? To what? Trade receivable account debit to what? To what? To finance income. To finance income. And what is the amount? the amount will be 7407 multiplied by 8% multiplied by 6 by 12, which is equals to what is the value, tell me? 7407 multiplied by 0.08 divided by 2 is 296, right? Is 296. But now see what they have done. Vernon company will receive payment of 8 million on 30th June 2009. Currently Vernon company has recorded 4 million in revenue and trade receivables. So what they have done is they have already recorded 4,000 as revenue and 4,000 as trade receivables, revenue and trade receivables. Okay. Now the directors intend to record the remaining 4 million in the year ended 31st December 2009. Okay. Now the cost of this sale has been accounted for correctly in the financial statements. Okay. Now, so what shall we do as a rectification entry? What shall we do? We should record an additional sales of 3407, right? We should record an additional sales of 3407, right? And we should record a finance income also of 296, because we are talking only about the P&L impact. We have to prepare only P&L, right? We have to prepare only P&L. So in P&L we have to record an additional revenue of this much and a finance income of 296. Tell me yes or no? Tell me yes or no, guys? 3703. From where you got 3703? 3407. Right. Now let's come to ACCA practice platform and solve it. Okay. So requirement. What is the requirement? Requirement is statement of. The requirement is to prepare a statement of profit or loss. Statement of profit or loss. Right. I hope it is clearly visible to you guys. Okay, now for the year ended 31 December 20x8, right? Now let's first prepare the structure of the P&L. Revenue, cost of sales, then comes gross profit, and then comes operating expenses, then comes profit from operations, then comes finance costs, then comes investment income, then comes profit before tax, right? Then after that comes tax expense, then comes profit for the year, right? Then comes other comprehensive income, right? And then comes total comprehensive income for the year, right? Now let's plot the figures. Also, which is given in the trial balance. Let's plot the figures, and then so what I will write here is as per trial balance, and then we will make all the adjustments. Then we will do the adjustments, and then we'll write the final SPL. What is the balances as per the final SPL? Okay, we'll write that. Now, okay, so let's write the figure of revenue. So as per the trial balance, what is it? This is the trial balance, right? So cost of sales is 46410. So let's write here cost of sales is negative 46410. Now what is the next? Finance cost is 4050. Finance cost is negative 4050, right? What's next? Investment income is 1520. Investment income is 1520. What else? Operating expenses 20640. Operating expenses negative 20640. Now what else? Revenue is 75350. Revenue is 75350. Now and tax is 130, tax is 130, tax is 130, right? So now let's calculate the gross profit. What is the profit from operations and what is the profit before tax? This is the profit before tax, and profit for the year is this much. Profit before tax minus tax expense is the profit for the year, right? And profit for the year and other comprehensive income will give rise to total comprehensive income, right? Tell me yes or no, guys. Is it clear, everyone? Is it clear, everyone? Little zoom you want me to do? Okay, is it clear now? Visible clearly? Visible clearly, everyone? Right, so this is as per the trial balance. We have not done any adjustment so far, right? But now we will start doing the adjustment. We'll start doing the adjustment, right? Now come to our notebook. Come to our notebook, note 1. So what we have to do as part of note 1, we have to increase our revenue. We have to increase our finance income, right? So revenue, increase it. So it is plus 3407. Working note number 1. Working note number 1. Right, so this is 3407 we have recorded. Now finance income, where will we record finance income? Tell me, where will we record finance income? Either we can record in investment income or we can reduce the operating expenses, right? We can record in investment income or we can reduce the operating expenses, right? So what we will do, we will reduce the operating expenses, right? So we have to if we have to reduce, we have to add a plus sign, right? So plus 296, working note number 1. Tell me, guys, is it clear till here? Is it clear till here? Is it clear till here, everyone? Is it clear till here, everyone? Right, since we have to reduce it, that's why we have to do a plus sign. We have to write a plus sign, right? We have to write a plus sign. We have to reduce our expenses, right? So note number 1 is clear, I believe. Now move on to note number 2. Let's move on to note number 2. Let's move on to note number 2. Now move note number 2. Vernon company also sold goods to an overseas customer. Okay, it says that this is your 31st December. This is your 1st December. On this date, it says that sold goods to an overseas customer. Okay, sold goods to an overseas customer for 12 cromits. 12 cromits. Okay, they agreed for a 60-day payment term. Means it will be paid when it will be paid on 31st of January. It will be paid. It will be paid on 31st January. But this is my year end date. This is my year end date. This is my year end date, right? Now, although the goods were correctly removed from inventory and cost of sales, means inventory and cost of sales are correct. Inventory and cost of sales are correct. Amount remains unpaid on 31st December 2008, right? That's what amount remains unpaid. So here we will show a trade receivable. Here we will show a trade receivable of 12 cromits, right? Here also we'll show okay. Now so now question is, it says that the exchange rate is exchange rate, let me write here. What is the exchange rate? So exchange rate is 6.4 cromits per dollar, and the exchange rate is 6 cromits per dollar here. 6 cromits per dollar is the exchange rate here. Now tell me, what is the journal entry on this date and what is the journal entry on this date? Please tell me. So on this date, the journal entry which we will pass is trade receivables account debit to revenue. Trade receivables account debit to revenue, that is how much? 12 cromits divided by 6.4 cromits per dollar, right? 6.4 chromats per dollar. So what is the total dollar amount? Is equals to dollar how much? 12 divided by 6.4 is $1.875. $1.875 is $1.875 million, right? So now let's convert it into thousands. So this becomes how much? $1,875,000. $1,875,000, right? Now what is the entry here? Now see, the sales revenue is fixed. Now trade receivables has to be restated, right? Why? Because it is a foreign currency monetary items. Right? So that's why it has to be restated. I hope it is clear to all of you. This has to be restated, right? Now if we restate, what is the value of trade receivables? Tell me, what is the value of trade receivables? So the trade receivables becomes how much? 12 chromats divided by 6 is equals to $2,000. $2,000, right? $2,000. Now so from 1875 to 2000, so what does it become? The entry will be trade receivables account debit to unrealized forex gain, and this will be recorded as where, right? It is how much? 1875, 125 is 125, right? So you have to reduce it from operating expenses. Right? Now so what you will do? First you will record the sales, and then you will record this gain, right? So how the adjustment will go ahead? So you will have to record the sales, that is plus 1875, working note number 2. Again here also you will do plus 125, working note number 2. Tell me guys, is it clear everyone? Yes, you can add in investment income also, Naman and Priyanka, or you can alternatively you can write here, but I think it is better to write in operating expenses all these things. Why? Because this is a part of the operations, right? You are not getting this forex gain due to investment. Have you invested anywhere? No. This is a part of your operations, right? So it's better to reduce the operating expenses. Is it clear everyone? Tell me guys, is it clear everyone? Okay. Now what else? So note number 1 is done, note number 2 is done. Coming to note number 3. Note number 3, let's write here in our notebook. Note number 3. Okay, now what is note number 3? 5% convertible loan notes, right? Or it is, no, it is a financial asset. Financial asset. That's again a very good point. Now let's discuss this point. Vernon company acquired $9 million 5% bonds at par value on 1st January 2008. Okay. Now let me draw the diagram for this one. On this date, that is on 1st January X8, the company acquired $9 million bonds. $9 million bonds and paid 0.4 million as broker fees, as broker fees. Okay. Now it says the effective rate is 8%. Effective rate is 8%, right? Now the question is, first you have to classify whether this financial asset will be classified as per amortized cost method, or FBT OCI, or FVT PNL, right? Now, so what is the principle of the, what is the characteristic? Tell me. Assuming this instrument will be hold till maturity, this instrument of 5% bonds, it means principal and interest, right? Principal and interest. So if there is a principal and interest, don't you think it will give rise to amortized cost method and not FBT OCI and not FBT P&L? Also, there is one more hint. There is no fair value given. So this gives us a hint that we have to follow amortized cost method, right? Now, in amortized cost method, tell me what is the entry that will pass on the date of issue of the on the date when we purchase the instrument. What is the journal entry that will pass on the date when we purchase the instrument? What is the journal entry that will pass on the date when we purchase the instrument? The entry will be financial asset account debit to bank. And what is the amount for amortized cost method? It will be at what amount? Tell me at what amount? 9 million, 8.6 million or 9.4 million? 9, 8.6 or 9.4? 9, 8.6 or 9.4? 9.4, very good. So it is 9400. It is 9400. But now see what they have done. Okay, Vernon company incurred 0.4 million broker fees when acquiring the bonds, which have been expensed to operating expense. Is it correct? No, the transaction cost cannot be transferred to P&L in case of amortized cost method. The transaction cost has to be capitalized with the asset. So what will we do? We will reduce operating expense. We will reduce operating expense by 400. We will reduce operating expense by 400, right? Now tell me, what is the amount of finance income? What is the amount of finance income that we will record? Finance income will be 9400 multiplied by 8% is equals to what amount? Tell me. 9400 multiplied by 8% is 752. And now what they have done? Minus contractual cash flow is how much? Tell me what is the contractual cash flow? 5% bonds for 5% bonds, right? Of 9 million. So what is the amount? So 9000 multiplied by 5% is 450 is the contractual cash flow. 450 is the contractual cash flow. And now what they have done? See what they have done. Okay, now Vernon company has recorded the interest received, that is 450, as in investment income. Is it correct? No, right? So let me write here, since I'll write using blue pen, okay, or I'll take red pen basically. Since Vernon company has recognized finance income of 450, right? But actual finance income, what is the actual finance income? That is 752. So now what is the finance income to be recognized? Tell me what is the amount. So 752 minus 450 is 302. Is 302 is to be recognized as finance income. Tell me yes or no. Right? So now what we can do is we can recognize finance income of how much? 302. Of 302 we can recognize finance income, working note number 3, and also we have to reverse 400 from here. We have to reverse, that is working note number 3. And now see what is the question giving you a hint. That the interest income, that the finance income has to be recorded in investment income. What we have done here, we have recorded the finance income of this unwinding of the trade receivables, that is this finance income. I am talking about this finance income. Working note number 1. See, this 296 we have recorded where? we have recorded in operating expenses. So the question is giving us an hint that this finance income has to be recorded with the investment income. So what will we do? We will move it from here. Otherwise, recording there also is not wrong, but if the question is giving us a hint, why not follow that hint? Why not follow that hint? Understood, guys? Is it clear, everyone? Is it clear, everyone? Is it clear to everyone? So working note number 1, 2 and 3 should be clear to everyone, I believe. Working note number 1, 2 and 3 should be clear to everyone, I believe. Please confirm, guys. Okay, fair enough, fair enough. Now let us move on to working note number 4. 1, 2, 3 and 1, 2 and 3 is clear. Working note number 4. So let me write here working note number 4. Note number 4. Note number 4 is for property, plant and equipment. Okay, now let's understand this. 4. During the year, Vernon company revalued its head office for the first time, resulting in an increase of 12 million. Now tell me, what is the entry for this one? What is the entry for this one? It is property account debit to revaluation surplus. And where will this revaluation surplus be treated for? An other comprehensive income. Other comprehensive income. And what is the amount? 12,000 is the amount. 12,000 is the amount. And now question, it doesn't stop there. Question says that deferred tax is applicable to this gain at the rate of 25%. Now what is the amount of deferred tax? If we are gaining, we have to pay a deferred tax also. We have to recognize a deferred tax also, right? We have to recognize a deferred tax as well on this one. So the deferred tax on this at the rate of 25% is equals to 3,000, right? So what is the entry for that one? Entry is deferred tax charge that will be transferred to OCI account debit to deferred tax liability. Very good, Naman. Very good, Naman. Deferred tax liability, and the amount will be 3,000. Amount will be 3,000. Amount will be 3,000. So where will we record here? Where will we record this? So we will record here in other comprehensive income. We will say here revaluation gain, revaluation gain, right? So we will write here plus 12,000. Working note number 4, right? And then we will write here deferred tax on revaluation gain, right? And we will write here minus 3,000, that is also working note number 4. Is that clear, everyone? Is that clear, everyone? The working note number 4 is clear, everyone? Come on, guys, tell me. Is working note number 4 clear, everyone? Okay, fair enough. Now let us move on to the question again. Point number 5. Vernon company values its investment property using fair value model. Okay, the investment property is increased by 4 million. Now investment property is there is an increase. So now let me write note 5. Let me write note 5. This is for investment property. Tell me, if there is an increase in the investment property, where will the differential be transferred to? Investment property account debit to what? To what? To what? S P&L. Very good, Naman. Very good, Naman. To P&L, and the P&L we can record it in investment income, and we can record it in investment income, right? 4,000, right? So let's record that as well. Note 5 So in P&L we can record in investment income, we can write here plus 4,000 plus 4,000 working note number 5, working note number 5, right? Now let's come to the question. So till 5 is done. Now coming to note 6, coming to point number 6, the tax figure in the trial balance represents under or over provision for the previous year. The current tax liability for the year ended is estimated to be 3.2 million. Okay, now let's see what is the amount tax. Tax is a debit balance. Tax is a debit balance. Now what does it represent? Debit balance of current tax represents what? Under provision or over provision? Debit balance of current tax provision represents what? Debit balance. Under provision, right? Under provision has to be added or adjusted. It has to be added, right? So it is 130. Now plus what is the current year provision required? Current year provision required is 3.2 million, that is 3,200. So what is the tax expense for the year? What is the tax expense for the year? Is 33,330, right? Now let's write here. So it is my negative this one, then we will write here negative 3200 working note number 6, working note number 6. Any other working note? Any other working note? So we adjusted 1 done, 2 done, 3, 4, 5 done, 6 also done. 7 is related to EPS, which we are skipping for the time being. 7 is related to EPS, which we are skipping for the time being. Now let's come to our P&L and finalize it off, right? So what is the revenue? This plus 3407 plus 1875. So this is my revenue. Now what is my cost of sales? This is my cost of sales. What is my gross profit? This is my gross profit. Now what is my operating expenses? This plus 125 plus 400, right? Now so profit from operations, this is my profit from operations. Now what is my finance cost? This is my finance cost. What is my investment income? This plus 296 plus 302 plus 4,000, right? Now what is my profit after before tax? What is my profit before tax? That is 16175. That is 16175. Now what is my tax expense? That is this minus 3,200, that is 33,330, right? Now my profit for the year is how much? Let me paste the formula. So it is 12845. That is 12845, right? Now what is my other comprehensive income? That is 12,000. That is 12,000, and that is negative 3,000, right? Now what is my total comprehensive income is this much. That is 21845. That is 21845. Tell me guys, is it clear to everyone now? Is it clear to everyone? Is it clear to everyone? Is it clear to everyone? Now let me paste it here. Let me paste the solution here so that if anyone wants to refer the solution, they can refer it. I hope it is clear to everyone, this question. Tell me anyone, if anyone has any issue in this question. Anyone has any issue in this question? If anyone has any issue in this question? Is it clear to all? Clear to all? Okay. Now let us start the type 2. Let us start the discussion on type 2. Let us start the discussion on type 2. Type 2. type 2 question. Okay, and the question which you have to solve here is Haverford, which is tested as part of March June 2018. Ready for this question? Ready for this question, guys? Haverford, ready for this question? Haverford? Okay, let's start solving this question. Haverford. Now, let me close Vernon now. Okay, now let me start the let me remove this one. Okay, now let me open your Haverford question. This is your Haverford question, right? Now see, this is which attempt question. See, March June 2018 question, right? March June 2018 question paper, right? Question number is 32. Haverford is 32. Question number 32. Question number 32. So right here, question number 32. Okay, now what is the year ended? Year ended is 31st December 2007. Year ended is 31st December. Year ended is 31st December X7. Okay, now let's read the question and try to solve it. Below is the trial balance. Below is the trial balance. Okay, trial balance is given for the question. Okay, now what is the question saying? Adjustments are given. 1, 2, 3, 4, 5 adjustments are given. Okay, now what is the requirement? See, what is the requirement? So what is the question giving? The question is giving you trial balance. Question is giving you adjustments. Question is giving you adjustments, and now the question is asking for adjusted profit, statement of adjusted profit, plus the question is asking you statement of changes in equity, statement of changes in equity, plus the question is asking you SOFP, plus the question is asking you SOFP, right? So these are the three requirements of the question. We can write here A, B and C. These are the three requirements, and the question is giving you what? Trial balance plus adjustments. Question is giving you what? Trial balance and adjustments. Is it clear, guys? Is it clear, guys? Okay, now let's try to understand. Let's try to solve this question. Let's try to solve this question. So again, what we will do here is we will discuss the notes here and solve the main question in the ACCA practice platform. Okay, so note 1. We'll start with note 1. We'll start with note 1. Now, so what is the note 1 dealing in? Now, on 1st January 2000X1, that is at the start of the year, Haverford company issued $80,000 4% convertible loan notes. Now, convertible loan notes means what? It is a compound financial instrument, right? It is a compound financial instrument. Now, for compound financial instrument, how will we deal? Right here, it is a compound. It is a compound financial instrument. It is a compound financial instrument. It is a compound financial instrument. Okay, now for compound financial instrument, we must not forget that as I told in the class, there are three components. There are three components, right? One is the principal component, one is the interest component, and one is the conversion rights component. One is the conversion rights component. One is the conversion rights component. Right now, we have to say that which component is belongs to equity or liability, right? So conversion rights, as I told in the class, it will always be equity, right? Now let's assess for principal and interest. Now Haverford company issued $80,000 100 4% convertible loan notes. The loan notes can be converted to equity shares or redeemed at par on the same date. Means what? Is it compulsorily convertible or optionally convertible? Tell me. Is it compulsorily convertible or optionally convertible? Tell me guys, is it compulsorily convertible or optionally convertible? Optionally, right? Now if it is optionally convertible, it becomes what? If it is optionally convertible, it becomes what? It becomes financial liability, right? The principal is financial liability. What does it say? The loan notes, okay, interest is payable annually in arrears on 31st December each year. Means interest has to be paid every year, right? So interest has to be paid every year means it's a contractual obligation. If it's a contractual obligation, this is also a financial liability. This is also a financial liability, right? Now, so we have to calculate what is the value of financial liability and what is the value of equity. So for that, what will we do? We'll calculate the present value of principal component. We'll have to calculate the present value of principal component at what rate? At coupon rate, or at the rate of similar instruments without conversion rights. So we'll use the rate of the similar instruments without conversion rights, that is 6%. An equivalent loan without the conversion rights would have required 6%. So we'll calculate the present value at the rate of 6%, right? So principal component, what is the principal amount? 80,000 multiplied by 100 divided by 1000, because we are taking the amounts in thousands. So it is 8,000 multiplied by, what is the annuity factor for 6% for at the end of third year is 0.840. So it is 0.840 is equals to what amount? Tell me. 8,000 multiplied by 0.840 is 6720. Is 6720. Now again we'll calculate the present value of interest component as well. Interest component as well at the rate of 6%. And now what is the interest component? What is the interest component? What is the rate of interest? 4%, right? So 8,000 multiplied by 4% is 320. Multiplied by 4% is 320. And what is the annuity factor? Annuity factor, you have to add these three, you have to add these three, you have to add these three, right? So annuity factor is 0.943 plus 0.890 plus 0.840. That comes to 2.673. That comes to 2.673. Right? So what does it become? So 320 multiplied by 2.673 is 856. Is 856. So now what is your financial liability? What is your financial liability? So financial liability is 856 plus 6720 is 7576. 7576. Right? Now what is the issue proceeds? Tell me what is the issue proceeds? What is the issue proceeds? Is 8,000, right? Issue proceeds is 8,000, right? Now if issue proceeds is 8,000 and your financial liability is this much, so what is your equity then? What is your equity? What is your equity? Equity is 8,000 minus 7576, that is 424. Is 424. Is 424. I hope it is clear to everyone now. The value of equity is clear to everyone now. Tell me, is the value of equity is clear to everyone now? Right? Okay. Now, the story doesn't end here. The story doesn't end here. We have to so what has to be rectified, because they have done certain wrong treatment. Okay, what they have done is on this date, that is on the date of issue 11x7, they have treated financial liability as 8,000. Now what they have done, first I am writing what they have done. Okay. Now the annual payment has been included in finance cost. Okay, now they have recorded during the year finance cost of how much? 320 they have recorded as finance cost. 320 they have recorded as finance cost, right? So this is what they have done. But now tell me what should have been done. What should have been done? So what should have been done is finance liability should be only 7576 and equity should be, let me use red pen for this one. Let me use red pen. So what should have been is 424 is 7576. They should have recorded equity at 424. Rather they should have recorded finance cost of how much? Rather than 320, they should have recorded a finance cost of actual finance cost is 7576 multiplied by 6% is equals to how much? 7576 multiplied by 6% is 455. Is 455 means we have to record an additional finance cost of how much? 455 minus 320, that is 135 is the additional finance cost that we have to record, right? And now what is the closing financial liability and closing equity? So closing financial liability, equity will be 424 only, equity will be 7576, now plus finance cost of 455 minus contractual payment of 320, that is your finance liability will be 7576 plus 455 minus 320 is 7711, is 7711. Please tell me guys, is it clear to you guys or not? Is it clear so far or not? Is it clear so far or not? Now the question that comes up is how will we treat it? How will we treat it off in this one? So requirement number 1, requirement A is a statement of adjusted profits. So for that, first we need to take what is the profit that is calculated by the question, right? So profit, or you can say draft profit as per trial balance. Draft profit as per trial balance. So what is the draft profit as per trial balance? See here, that is how much? 2250. That is 2250, right? So let's write here 2250. And now what we will do is adjustments. We will do adjustments, right? So in the adjustments, what will happen is, tell me what will happen in adjustments. Note 1 adjustment will be, what is the first adjustment that you have to do? Finance costs. And what is the amount of finance cost? Tell me. 135, if I'm not wrong, right? 135 is the finance cost that you have to charge. Any other thing which will impact the P&L? No other thing will impact the P&L, right? No other impact on P&L, right? Definitely it will impact my balance sheet, but we are not preparing the balance sheet as of now, but it will not, nothing will impact my P&L, right? Is it clear guys, everyone? Tell me. Is it clear guys, everyone? Tell me. Okay, now coming to note number 2. Okay. Now, during the year, Haverford company entered into a contract to construct an asset for the customer, satisfying the performance obligation over time. The total contract price is 14 million. So you can write here contract price is $14,000. Okay. Now, costs incurred till date is $1900, and further costs is how much? 7.1 million. is $7,100. Right now, it says that the percentage of completion is 40 percentage. Percentage of completion is 40 percentage. The question says, right now, tell me what is the amount of revenue to be recognized. What is the amount of revenue to be recognized? Tell me. That is 14,000 multiplied by 40 percentage is how much? 5,600. Right now, what is the cost of sales? What is the cost of sales? Cost of sales is how much? Tell me. 1,900. Cost of sales is 1,900, right? So what is the profit from this contract? Profit earned till date. What is the profit earned from this contract? That is 5,600 minus 1,900 is 3,700. Is 3,700. Is 3,700. Is it clear, guys? Is it clear, guys? But now we should not forget one more thing. It says that to date, Haverford company has received 1.4 million from the customer. 1.4 million from the customer, right? So what we have to understand here is, this is the P&L impact. This is the P&L impact. This is the P&L impact. Now we have to calculate balance sheet impact. In balance sheet, what is the amount of revenue recognized in P&L? What is the revenue recognized in SPNL? That is 5,600, right? And what is the amount invoiced? What is the amount invoiced? What is the amount invoiced? That is 1,400. So what is the remaining? What is the remaining amount called as? 4,200 is called as contract asset. 4,200 is called as contract asset. Is it clear, everyone? Is it clear, everyone, guys? Contract asset of 4,200 is clear, everyone? Very good, very good. Now let's give the impact in the this one. So note 2 is profit from revenue contract is how much? Plus 3,700. I hope it is clear, guys. I hope it is clear. Now coming on to note 3. Coming on to note 3. Coming on to note 3. What is note 3? Bonus issue. Bonus issue. Okay, now Haverford company made a 1:5 bonus issue. Okay, but before we do that, tell me what is the number of shares? Number of shares prior to bonus issue. Prior to bonus issue. Prior to bonus. Tell me what is the amount of number of shares? See the question. Number of shares is 20,000. Is 20,000 shares. So shares issued. Shares to be issued. What is the number of shares to be issued? The number of shares to be issued is 20,000 divided by 5 is 4,000 shares. Is 4,000 shares. Why 20,000, Naman? 1:5. The ratio is 1:5, right? Bonus ratio is 1:5. The bonus ratio is 1:5. Let me write here. Bonus ratio is 1:5, right? 1 share for every 5 shares held. 1 share for every 5 shares held. So 4,000. Now what does the question say? What does the question say? If you come to the question, what does the question say? Haverford company intends to utilize share premium as far as possible in recording the bonus issue. Okay, let's see what is the balance of share premium. What is the balance of share premium? C, 3000. So what is the entry for this one? So the entry will be share premium account debit, share premium account debit 3000. The remaining will be adjusted from where? Retained earnings, right? The remaining will be adjusted from retained earnings. Retained earnings account debit. How much? 1000. To what? To equity share capital. How much? 4000. I hope it is clear, everyone. Will it impact the P&L any manner? Will it impact the P&L in any manner? No, it will not impact the P&L. No impact on P&L, right? So it will not impact the P&L. Note 3, no impact. Note 3, no impact. Okay. Now coming on to note 4. Note 4. And what does note 4 dealing? It deals with property revaluation. Property revaluation. It deals in property revaluation. Okay. Now what does it say? Haverford company's property has previously been revalued upwards, leading to a balance on the revaluation surplus on 1st January 2007. Property had a remaining life of 25 years on 1st January 2007. Okay. Now as at 31st December, the property is valued at now. Okay. Now first what we have to calculate? What is the carrying amount of property? What is the carrying amount of property on 31st December x7? Now for that, first you have to calculate what is the opening balance. What is the opening balance? See, 18,000 is the opening balance. Is there any accumulated depreciation? Is there any accumulated depreciation? No. 18,000 is the balance, right? So 18,000 is the balance, minus depreciation for the current year is 18,000 divided by remaining life is 25 years. And this is equals to what? 18,000 by 25 is 720, right? So it becomes 18,000 minus 720 is equals to 17280. And now what is the fair value? What is the fair value of property? Fair value of property on 31st December x7 is 16,000. Now what is the amount of revaluation loss? What is the amount of revaluation loss? The revaluation loss is how much? 1280. Now we will see what is the balance of revaluation surplus. See, revaluation surplus is valued at 800, has a value of 800. Now what does the question say about revaluation surplus? No entries have been made to account for the current year depreciation. Okay, current year depreciation is not accounted for, so we will have to, as part of note 4, we will have to do the accounting for depreciation. Current year depreciation of property, that is how much? 720. This is 0, this is negative 720, right? Now what does the question say further? Okay, Haverford the company does not make an annual transfer from the revaluation surplus in respect of the excess depreciation, right? Means the revaluation surplus is transferred to retained earnings at the time of disposal of the asset, not now. So what is the balance? Okay, this will be adjusted from revaluation reserve, but it has a balance of 800 only. The remaining will be adjusted with the SPL. How much? 480. How much? 480. How much? 480, right? So the journal entry will be revaluation reserve account debit, SPL account debit to property to property, amount will be 800, 480 and 1280 and 1280, right? This is the general entry. Now what is the impact here in the P&L? Note 4 again, revaluation loss, right? Revaluation loss of property, and what is the amount? 480 is the amount of which will be transferred to P&L, right? Now what is the fifth adjustment? Let me write note 5. This is relating to inventory. Now what is the note 5? It has been discovered that the inventory totaling $0.3 million has been omitted from the final inventory count in the above trial balance. Basically, it says that the inventory of 0.39 million, which exists but is not recorded. So let's record that. So entry will be inventory account debit. To P&L of how much amount? $0.39 million means 390. So what is the impact in P&L? So let's write here note 5. Inventory is how much? Plus 390. So that's the total adjustment, right? So let's add it. This is the total adjustment, right? So final, we can say profit, adjusted profit. You can write adjusted profit for FY ended 31 December 20x7. What is the amount? This plus this is 5005. Guys, tell me, is it clear to everyone? The draft profit as per trial balance, this statement of adjusted profits. Is it clear to everyone? The statement of adjusted profits. Okay, now requirement B. Is a statement of changes in equity. Requirement is statement of changes in equity, right? Now, so what is the statement of change in equity? So first is equity capital, then is share premium, then what? Tell me, then what? Equity capital, then share premium, then what? Revaluation surplus, then retained earnings, then what? You can say a loan note, equity component, loan note equity component, right? That's all I believe. Total, and the rest is total. So now okay, now what is the balance on 1st January 20x7? What is the balance on 1st January 20x7? That is 20,000. Share premium has a balance of 3,000. Revaluation surplus has a balance of 800. Retained earnings has a balance of how much? Let me just see the question. Retained earnings has a balance of how much? 6270. Loan note has a balance of 0. So total is equals to sum this much, right? I believe it is clear to all of you. I believe it is clear to all of you. Okay, fair enough. Now what we'll do is we'll see the each and every notes and say just check where the adjustment is to be done in statement of changes in equity. Okay, note. Okay, so what is the adjustment to be done for this one? We have to record in equity. We have to record in equity, right? So issue of convertible loan notes. Convertible loan notes is 424. We will write here plus 424 plus 424, right? Then note 1 is done. Note 1 is done. Now coming on to note number 2. Any adjustment done in SOCIE? No, right? Now you can write here then profit for the year. Profit for the year. Profit for the year is how much? 5005. 5005 is the profit for the year, right? Now then comes note 3 is a bonus issue, right? Bonus issue. So issue of bonus shares. Issue of bonus shares is how much? So first we'll reduce 3000 from here, we will reduce 1000 from here, and we'll add 4000 here. I hope it is clear, everyone. Right? Now note 4 is property revaluation. Property revaluation, right here, property revaluation, right? So we will adjust this 800 from here, and the rates adjusted from already adjusted from the profit, right? Now so this is also done. Note 5 inventory, no adjustment required here, no adjustment required here. Now coming on to trial balance, let's see anything to be done. This is already adjusted, retained earnings adjusted, profit already adjusted, the convertible loan notes already adjusted, dividend paid. So dividend paid, let's adjust it here. Dividend paid, it's to be adjusted here. How much is the amount? 3620 minus 3620 is the amount of dividend paid. Cash received from customer at and cost incurred on contract to date, we have already considered the profit, right? Inventory, trade receivables, current liabilities, no adjustment required here in SOCIE, right? So what is the total? This is the total, right? Now what is the total here? Total is sum this is the total. Tell me guys, is it clear, everyone? Statement of changes in equity is clear to everyone? Tell me, is the statement of changes in equity clear to everyone? The statement of changes in equity is clear to everyone? Anyone has any other queries in statement of changes in equity? Okay, fair enough. Now requirement number 3, that is requirement number C is statement of financial position, right? As at 31st December 20x7. Okay, now so how will we go ahead in this? So first we'll prepare the balance format of the statement of financial position. Assets, non-current assets. Let's see the trial balance and see what is it coming. Property, right? Now any other non-current assets? No. Now coming on to current assets, right? So current assets, how much are? Inventories, trade receivables, cash. Inventories, trade receivables, and also we have to recognize a contract asset, right? We have to recognize a contract asset and cash, right? So that's all about our financial position, the asset side. Now let's come to equity and liability. Right? Now equity and then comes other components of equity, right? Then comes what? Non-current liabilities, that is convertible loan notes, financial liability component, right? Now then current liabilities, then comes what? Current liabilities, and so the total is, you can write here, total equities and liabilities, total equity and liabilities. Now let's write the figures which are there already given in the trial balance. Property is 18,000, that is given, but we know what is the final figure of property, right? We know the final figure of property. So let's write first 18,000. Inventories is given here, how much? 4310. Now trade receivables is given 5510. Contract asset is not given here. Now cash is given 10320. Equity is given 20,000. Here other components of equity is given, see how much? Ordinary shares, or like we can ignore other components of equity because we have already calculated it, right? Convertible loan notes is given 8,000 here. Current liabilities is given how much? 1940 here. Just check if anything is missing. Property we have considered, or share capital we have considered. Other components of equity, these 3 and these 4 we have not considered because we have already prepared the statement of changes in equity, so we'll take it directly from there. Loan notes we have taken 8,000, we have taken already here. Loan notes we have already taken 8,000 here, right? Now after that it is dividend paid we have already considered in SOCIE. Cash received from customer and cost we have already considered in the profit. Inventories we have written, trade receivables we have given, cash we have written, current liabilities we have written. So all other things we have written. Now let's do the adjustment. Let's do the adjustments. Okay. So let's write here as per trial balance. Then we will do the adjustments, and then we will come on to the final SOFP. Now adjustments. So what is the adjustment to be done here? So first is minus depreciation for the current year 720. Then minus you can write here what is the note number? What is the note number for this one, guys? 4. Note number is 4. Okay. So you can write here minus 720 working note number 4, and then you can write minus 1280. That is also working note number 4, right? So this will be 18,000 minus 720 minus 1280 is 16,000. Now inventories we have to add 390, right? We have to add 390, right? That is working note number 5, right? So it is this plus 390. Trade receivables is as it is, no adjustment. Contract asset we have to write how much? Let's come to our notes. Contract asset is note number 2, I believe. Note number 2, right? How much? 4200, right? Contract asset is 4200. So you can write here plus 4200. You can write here plus 4200. Working note number 2, right? So write here plus 4200. Now cash, no adjustment, so we'll directly write 10320. So what is the total assets? Total assets is 40730 is a total asset, right? Is a total asset. So let's write here total assets is 40730, right? Now equity. So equity is plus 4,000 that is bonus issue, that is working note number 3, right? So it becomes how much? 20,000 plus 4,000 is 24,000. Now other components of equity is requirement number B. What is the balance of other components of equity? Tell me. What is the requirements of other components of equity? That is 31079, but minus, we will do minus how much? 24,000, because that is already considered equity here. Right? So we will do the other components of equity 7079. I believe it is clear everyone till here. Now this one what we'll do, minus 424 is working note number 1. You can write here equity working note number 1. Then you can write plus you can write here, or you can directly write working note number 1 and directly write here 7711, right? See, working note number 1, if you go to working note number 1, we have already calculated the balance of financial liability, right? We have already calculated the balance of financial liability, right? 7711, right? Now, so what is the current liabilities? There is no adjustment in current liabilities, directly we can write this one. So what is the total of here? 40730 is the total equities and liabilities that is coming up here. Is it clear, everyone? The SOFP is clear to everyone? Is SOFP also clear to everyone? Tell me, guys. Is SOFP also clear to everyone? Right? Anyone having any queries now? Tell me. And we have solved these two big questions in merely 26 plus 60 is 86 minutes, right? Though I have explained also, and then also we have solved. So if we can solve these questions in 86 minutes, means one question we have solved in 43 minutes, right? The allotted time is 36 minutes. So I have also explained. So if I remove the explaining time, so we have solved these questions in merely 30 minutes. We have solved one question in merely 30 minutes. And if you maintain this pace in the exam, definitely you will not face any time management issues. Okay, is that clear, guys? Now, what is the agenda for tomorrow's topic? What is the agenda for tomorrow's class? So in the tomorrow's class, we will be discussing the interpretation of financial statements. We'll be discussing about the ratio cash flow statements. We'll be discussing about the, you can say, earning per share. Okay, these three topics we'll be discussing in the tomorrow's class. We'll be discussing these three topics in the tomorrow's class, and we'll wrap up our revision series. I hope this revision series would have been helpful to you guys. If anyone has any feedback, I like to have that feedback in the WhatsApp group. And also please like this video and share this video with the relevant students or candidates who are appearing financial reporting paper in September 2022 examinations, guys. And if anyone has any queries, do reach out to me. That's all for the day, guys. Anyone, is it clear, everyone? Anyone has any query that they want to discuss now? Anything related to the question that we have discussed in the class today? Either Vernon or Haverford. Is it clear, everyone? Manav, Vidisha, Jisan, Priyanka, Naman. All others, guys, please tell me, is it clear, everyone? Yes, Naman, please tell me your query. Guys, come on, please, all of you who are watching the videos, please like it, guys. Please like it, guys. Naman, wait, okay, I need mock test questions pics from latest BPP kit, if you can send us. If the question asks us to transfer revaluation surplus to retained earnings over the period of time, so do we deduct retained earnings from the calculation of OCI? No, we transfer see, it is about the creation of revaluation surplus that we take to OCI. Okay, now once the revaluation surplus has to be taken from to retained earnings, directly it is equity to equity movement. Only the revaluation gain or revaluation loss has to be transferred to OCI. Okay, only the revaluation gain or revaluation loss has to be transferred to OCI. Now the transfer of revaluation surplus to to retained earnings is an equity to equity movement. Is it clear, Naman? Is it clear, Naman? Okay, anyone else has any other queries? Anyone else has any other queries? Clear. Okay, that's all for the day, guys. Thank you. Bye bye. Bye, guys.